Right, let's take a look at some of these charts. Plenty to catch up on in markets. Sorry I wasn't around last week, but the short hiatus means there is a lot to touch on. So looking forward to delving deep into the world of charts and technical analysis with you again. Things are starting to move, guys. The market's heating up. We've seen what I think is the big dead cat bounce on stocks. Everybody is bullish again. Literally every single person on Twitter seems to be bullish on Bitcoin. I don't think there's a single bear left standing, except myself. So what is giving me confidence that we are on the precipice of a major crash in equities and also in cryptocurrencies? Well, stay tuned to find out. Before we get into that, obviously, as I do every week, I will just remind you that none of this is financial advice. The clue is in the name. I'm a part-time trader, so you definitely don't want to be taking advice from somebody who's not a professional. I've spent years honing my craft, studying the charts, and I think I've turned myself into a pretty shrewd operator, but I certainly would hate to think of anybody making financial decisions off the back of any of my analysis. So please do your own research, make sure you educate yourself before investing in anything, and treat this purely as entertainment. But I hope it's useful. I hope it's something that you enjoy watching, and if you do, please hit the subscribe and the like button and help me grow the channel. I would be massively grateful. Obviously I spend an awful lot of time on these videos and the charts that I post over on X, and it's great to have your support. Right, so what is this chart? Let's go straight into the world of Bitcoin and cryptocurrency. So I love this chart, guys. So Grayscale is probably the early forerunner in the Bitcoin ETF space. This is a Bitcoin trust that is obviously highly correlated with the price of Bitcoin, but as you can see, doesn't look exactly like the beloved chart of BTC that so many of us have spent years poring over the detail on. But it gives us a really strong indicator, I think, of where we are in the current moment with Bitcoin. And the price action on this is so clean that I like to use this as a proxy for where the entire crypto space is going, and potentially it gives us some clues about wider market conditions. And look, really simply at the moment, I know we've had a bit of a rally over the last couple of months, but look at where we are, guys. Like, we have not really done anything of note, and people seem to have short-term memories, because this dip here was welcomed by bears like myself, and many of us, including me, for a large chunk of this move, believed that it was the beginning of the end and that we were heading lower. Sort of mid-April, I think, I started to see that actually this was a bullish formation. And if we look at the Bitcoin chart on the daily, I was going long around here on the breakout of this big downtrend and rode that about halfway up, and then decided that risk reward wasn't in my favor and that it was a counter trend rally, and ultimately I didn't want to hold too long, but I banked decent profit on this. But the thing for me is that, going back to the GBTC chart, people forget that back in 2021 we had a similar move, albeit on a bigger scale, where we topped out, we came down, we made some lows, and then price rallied all the way back up to the top. And actually on the Bitcoin USDT chart, price took out the previous highs before rolling over, and the real bear market began. And what we saw off the back of that was a year-long correction, which took BTC down in price by about 80%. And you saw the same sort of price action on GBTC, obviously, because this is highly correlated with the price of Bitcoin. And everybody was bullish up here, not realizing that actually this was a gift from the crypto gods if you were holding, and it was a great opportunity to get out and wait for much lower prices. And I think we are at the same point here. So yes, we've gone lower, we've rallied back up, we've taken out these highs, but look, this weekly candle is closing firmly beneath the previous highs, and we've done nothing, in my view, other than bump back into the upper boundary of this rising wedge. So I do anticipate that very shortly the move that I've been forecasting for the last 6 months, since December 2024, is about to begin in earnest. And guys, honestly, really, I find it shocking. I mean, I don't really, because this is what markets are about, but in some senses I find it shocking that everybody is so bullish up here when we're clearly just butting into resistance again. We've just taken out the highs. It's nothing but a final bounce, and in my view, it's only a matter of time now before we see price rolling over in a major way. And what does that mean for Bitcoin? Well, I've said this many times before, nothing has changed on my macro view. I believe that Bitcoin in 2027 will trade as low as $3,000 to $3,500. People call me insane for that, but I think all the technicals are lined up. And as I will get to in a moment, I believe that Bitcoin is going to suffer in what I think is going to be the most dramatic market crash, possibly in 100 years, but almost certainly since the types of crashes that we saw in 2000 and 2008. So the markets are in real trouble, and I'll come on to equities and the bond market in a moment. But if I'm right, cryptocurrency is going lower than anyone can imagine. People think that this is impossible, but I would just remind you that Bitcoin has got a history of major crashes. I mean, this correction from top to bottom here was about 80%, 77, 78%. And really all we saw in that time was a 30% correction in the NASDAQ and the S&P 500. So if I'm right and we get a much bigger correction potentially of up to 70, 80% in the NASDAQ, then Bitcoin's going to get absolutely obliterated. And people that believe that this asset does nothing other than go up clearly have short memories, because we've seen a history of major corrections, and I see no reason to believe that Bitcoin is going to be a fantastic hedge in a crisis. I think it will simply follow equities and other risk on assets down in a crisis. So this is what I'm expecting. And I put a post up, I think it was either yesterday or maybe this morning. I said, the prevailing sentiment seems to be you're in one of two camps if you're a crypto head. So the first camp is that this is absolutely insane and there's no way that Bitcoin could go as low as 3 to 4K. Fine, we'll agree to disagree. The other camp, I think, are even more deluded. These are people that say, oh, I can't wait for Bitcoin to go to 3K because I'm going to buy loads of it. And honestly, it is going to take a special kind of person to be buying Bitcoin down here, because by the time it gets there, trust me when I say, it will feel like Bitcoin is dead. Hash rate will be extinguished. Miners will be leaving the network. Exchanges will be going bankrupt. Even the major ones, the publicly listed ones like Coinbase, I expect will be in major financial difficulty. It will feel like the bottom has fallen out of the market, and it will have, because Bitcoin will be down 95% plus. Alts will be obliterated. People who have been holding for years, praying that crypto is their route to riches, will realize that they missed their opportunity in 2021. Alt season hasn't materialized. If anything, alts just get battered harder and harder and harder into this crash. People will leave the market in droves. And on top of all of that, I truly believe that there will be noises about fraud in the stablecoin market. We will be led to believe that all of the price action, the appreciation that we've seen in crypto assets in the last sort of decade and a half has been nothing but a product of fraud and manipulation from stablecoins. In addition to that, my last prediction is that when we do get down here, people will be saying that quantum computing is about to kill Bitcoin. In reality, I think buying down here is possibly the biggest gift that we could ever get. And I will be looking out for those prices and watching the market carefully, plotting my next moves. I would not be surprised if this is all just one massive period of accumulation that ultimately ends with the market coming back up to test these highs and going much further. Potentially even over the next couple of decades, we might see Bitcoin at $500,000, $1 million. So if it happens, a massive opportunity. But like I say, I don't think many people will still be around to realize it, and very few will have the guts or even the means, if we see such a precipitous decline in risk on assets, to be able to buy down here. Unemployment will pick up. It will be a crisis like nothing we've seen in our lifetime, in my view, and the end of a 40-year splurge in public spending, in debt accumulation, and in advanced economies. I think all of that comes crashing down to earth with a bang, and Bitcoin is going to suffer. So that's my view on Bitcoin, and you'll be surprised or unsurprised to know that my view on altcoins is even worse. We've seen a bit of a bounce. I've talked previously about the fact that Ethereum was really oversold here, and I was expecting a bounce into this region, and for that to be a good short opportunity. Obviously, crypto always finds ways of surprising you, so this really key level that we've touched as support and resistance many times dating back into 2022 has now been broken to the upside. I think lots of people are seeing this as a major reclaim. Lots of people are claiming that Ethereum is at the start of a much bigger move to the upside. I think people are going to be in for a nasty surprise in the coming weeks, because a few weeks ago, maybe 2 weeks ago, I painted this move here, and I can see this happening. I think we're getting closer and closer. We're starting to see on the lower time frames, the daily, the 3-day, some bearish divergences on the RSI. Price is beginning to weaken just as BTC tops out at this, this major resistance zone. So for me, even on a short-term basis, I'm struggling to find the logic in being bullish on cryptocurrency right now. And here we have my long-term prediction for something like Solana, which was that once we took out the all-time high back in January of 2024, as you can see here, my prediction was that would mark the top, and that we would follow this red path down into the $4 region. We are down significantly. We came down and swept all these lows at the range low, and we bounced, but as far as I can see, all we've done is rally back up to what was previously for many months the range high, which, don't forget, has been flipped into support briefly, and then this proved to be one big deviation before price got back under. So it's not a massive surprise that following this big move down, we've seen a bounce. The question is this a bounce that is going to be sustained, or are we seeing a rejection in this key zone here before price rolls over? Now, my view is that it's the latter, that this is nothing but a bearish underside retest of the range high, and that Solana is going to follow Ethereum and Bitcoin essentially to hell. I think people are going to get absolutely roasted in this market over the next couple of years, and anybody who is complacent about the role of cryptocurrencies in the global market is going to learn a harsh lesson that the vast majority of this stuff carries absolutely zero intrinsic value, and it's fine while the world is speculating and money is cheap and the corona checks are flying, but those days are gone. We are seeing a big regime change, and it does not bode well for cryptocurrency. So in my view, this market is going to go a lot lower. I can see Solana in the $3 to $4 region, but being totally honest with you, I can actually see it lower. I think some of these cryptos are going to get hit so hard, many of them are not going to come back, and it wouldn't surprise me to see something like Solana, given the steep rise that we've had since 2023. I think it just creates even more room to the downside when the market actually turns sour. And look, the rest of the chart. So if you look at Solana, that's obviously the Solana USDT pair. If you look at Solana versus other markets like Bitcoin and Ethereum, there's absolutely nothing to be bullish about here. And for those people that have called for alt season so many times, literally every week for the past 2 or 3 years, I said back here that this felt like distribution, and that any close on the weekly basis back beneath these range lows was bad news for bulls, and we got that back in February. We've retested the underside here in late February, and then since then we've rolled over, and this to me is nothing to get excited about. And if I know people are convincing themselves that the weakness in Solana versus Bitcoin and Ethereum is a good thing. I just cannot rationalize how you believe that to be the case. Solana's been the market leader since the bottom of the bear market correction at the end of 2022. Since then, not only have we seen this massive appreciation in Solana versus the dollar, which literally took us from $10 all the way up to close to 300. In addition to that, it's run hard against Bitcoin. It's been undoubtedly the leader in the space as far as the big caps go. And when you see it rolling over, you've got to ask yourself, is this a sign that Solana is weakening relative to other cryptocurrencies and the rest of them are about to boom? Or is a big breakdown after a period of accumulation in the market leader actually a sign that the entire market is turning sour? And it's my view that is the latter. I believe that this is nothing more than the first lower high for Solana versus Bitcoin, and that ultimately we're going to see a really significant crash that takes us back into these levels on Solana versus Bitcoin. And I'm seeing the same thing on Solana versus Ethereum. So this to me looks like a big rising wedge where the price of Solana versus Ethereum is topping out in a major way. We're now breaking the lower boundary of this. If you go back into April, I said that we were in the final throes of this move. And granted, I didn't expect the sort of bounces that we've seen this year, but in the grand scheme of things, they're nothing. You know, a 20-30% move on Solana versus Ethereum, it's really immaterial when you look at the scale of some of this volatility on the higher time frames. I believe that this level here would be an optimistic place for Solana to bottom versus Ethereum, and I could actually see it coming all the way back into this range here. Now, bear in mind, my projection for Bitcoin is a 95% decline, a 95-96% decline into this 3K region. So if Solana is going to underperform two assets that are about to fall 95 to 96% versus the US dollar, I don't know what to tell you. I mean, honestly, this is going as close to zero as you can get, in my view. So $4 is optimistic. I think there's a chance that we come all the way back and retest the all-time low on price, and potentially you see Solana trading back in the region of $1 at some stage. That honestly would not surprise me. Such is the magnitude, I think, of the change that we are seeing in the market. So that is Solana distribution, and then a first lower high on the higher time frames versus Bitcoin, and starting to break down out of this big rising wedge on Solana versus Ethereum. And here's a really interesting one. So this is Solana versus gold, and you know, like I'm not ashamed of the fact that when Solana versus gold broke down here and retested this big trend line that dates back to mid 2020, at the time I thought this was it. I thought Solana was completely cooked and we were in the early stages of it rolling over and falling into oblivion. What has happened since is that we've seen a slightly wobbly reclaim of the trend line, which mirrors what we've seen. You know, this trend line mirrors to some extent what we've seen on the USD pair, but USD hasn't been quite as strong as gold, so we've seen Solana trade down on the gold pair further than it has done on USD. But when this trend line broke, I thought we were about to roll over. Instead, we've seen this wobbly reclaim, and we've even gone so far as to reclaim these lows of this, what I think is a big distribution range. But look at what has happened. These lows, if we zoom in, these lows have started to give up again, and this week, if we get a close down here, it will be in my view, it will be a confirmation that this is a failed reclaim and that you will get this trend line breaking again, at which point I don't think there will be any forgiveness for Solana. I think it's literally going to get absolutely obliterated. So not a rosy picture for crypto. Not a huge amount has changed in my view on the higher time frames, except that, you know, people are even more bullish now than they were a couple of months ago. And let's be honest, they were pretty bullish then. You know, everybody likes to pretend that sentiment is awful and, you know, the bears are out in force. But in reality, there are very few of us. And you only have to check the comments I get when I get big attention on some of my Bitcoin posts to see that barely anybody believes that the kind of decline that I'm anticipating is possible. So, you know, all I'm seeing in the market over the last few weeks is another rejection from a key resistance zone, a swipe of the highs, you know, euphoric sentiment across the board, way too much optimism, and I think we are about to pay the price for it. But what sits behind all of this? So if we take a step back, this is a really key chart for me. So this is the yield on 30-year Japanese government bonds. And you guys might have heard of something called the carry trade. The carry trade is essentially that rates on borrowing in Japan have been artificially low relative to the rest of the market. So whereas at the moment, I think we're at something like 4.5% on long-term government debt in the US and in the UK, for some reason, up until very recently, you had rates, yields, I should say, rates in Japan trading at around about the 2% mark. And what has happened is that institutions have borrowed big in Japanese yen, and they've been investing their borrowed money into US markets. So you've essentially had this sort of like endless stream of capital flowing from the Japanese market, where people can borrow cheap, into the US market, creating demand for government bonds and demand for US equities. And it's why the US market in recent years has been so dominant relative to the rest of the world, or at least one of the reasons why. It's not the only reason why, but one of the reasons why is that you've had this flow of capital out of Japan and into the US. But we are starting to see what is known as the carry trade, so the borrowing of Japanese yen at low rates in order to invest in US dollar denominated debt and equity markets. We're starting to see that trade come to an end. And you can see from a technical perspective, back in 2022, we had this major break of this downtrend. Since then, we have broken out above the highs that go back as far as 2006. So to me, this is a sign that yields are not slowing down, that rates in Japan are about to go higher, putting further pressure on the carry trade, and will probably mean that people who have been borrowing in Japanese yen will have to start selling assets in order to repay some of the debt that they have taken on. So this does not look good for US markets in particular, and it's one of, not the only reason, but one of the reasons why I believe we are seeing some major shifts in the market. And this is the yield on 30-year government bonds issued by the Fed in the United States. Again, 40 years of downtrend, 40 years of rates going lower, institutions, people, governments borrowing more and more and more. And boy, those people who have over leveraged are under pressure now. And the percentage of government spending that is being spent on interest repayments, so just servicing of debt, is huge at the moment. And it is affecting markets and people in all sorts of ways. For me, if you look back at the really big moves that we saw in rates in response to inflation back in 22, these big candles here coincide with the major crash that we saw. These are quarterly candles, so these really coincide with the big crash that we saw in equities in 2022. I think lots of people bizarrely anticipated that this breakout would be short-lived and that rates would be pulled back to zero and the stimulus machine would be turned on, US dollars would be printed and assets would be bought up. And I just don't think that's going to happen. I think rates are going to push higher. I think markets are calling time on unsustainable borrowing, on the profligacy of governments, the failure of people to live, within their means, and ultimately there is zero demand for debt at the moment. So what you're seeing is debt instruments like treasury bonds in the United States are languishing at their lows. This is TLT, which is a bond ETF issued on the Nasdaq. This was the peak of the bond market, which coincided with the big COVID crash. And since then, so much debt has been issued that demand for it in the market has got weaker and weaker, and rates have had to rise to stem the tide of debt debasement. And I don't think that trend is gonna dissipate anytime soon. I think we are going to see a continued rise in interest rates across the board, in the yield that investors are demanding in order to purchase government debt. And that is going to put major pressure on markets. I've called this the gates of hell. I believe that when we start to see monthly closes back beneath these lows here, which I do anticipate will come at some point in the next year, I think that opens the doors for some major issues in markets. So this isn't just, me pulling numbers out of my arse, guys. This, there is real reason to believe that we are partway through a big shift in the way that markets operate. And the bond market is signaling that. Yields are pointing to really significant pressures on people, institutions, and nation states. And I believe that it's just too much of a coincidence that that is happening at the same time that we're seeing equities run into 100-year trendline resistance. And this is the S&P 500. And this trend line here dates all the way back to the beginning of the Great Depression in 1929. And here we are nearly 100 years later, and we've tapped that same trend line just as all of this risk starts to flood into the market. Now, could this press higher? Absolutely. Markets will surprise you, but I believe that what we've seen over the last few weeks is nothing more than a dead cat bounce, and that as everybody is getting euphoric and believing that it's just business as usual, we're going back to all-time highs, the market will not stop pumping. I've seen lots of calls for blow-off tops. I think people will be surprised, because where I think we are is somewhere like here or here, where we've seen the first big drawdown. Markets have bounced, people get excited, but ultimately we roll over into a serious crisis, like the one that we saw in 2000 or the one that we saw in 2008. I think this is the time to be cautious and to think carefully about where we deploy our capital. And likewise, I've been pointing out for some time that the Nasdaq has been bouncing off this trend line for a while. Yes, we pulled back exactly from the level that I said we would, called the top of the market at the end of 24, beginning of 25. We've bounced. It's fine. I know everybody's really excited. In my view, we're here. And it's about to get ugly. If you're betting on a blow off top, that's fine. And from a technical standpoint, I can see why you might feel like we're sort of here and that we need to get this big move up that suckers everyone in. But there are just too many signs out there that this is the top. And this is one of them. This is Netflix, which has seen a humongous rally off the bottom. I think is up by about 600%, possibly even more. Let's have a look. Yeah, about 600%, bang on, since the bottom of the 2022 correction. And I've been putting this chart out there for weeks, saying this is not the time to be bullish. We are, in my view, we're just testing the upper boundary of this broadening pattern, this megaphone pattern, and there's just too many confluent factors out there. Bitcoin at resistance, Japanese yields breaking out, putting the carry trade under pressure, US yields holding strong, investors, buyers of government debt demanding a higher return for what they see as significant risks in the bond market, the debt market at the moment. And you can see that in the fact that something like the TRT is languishing at the lows. So there are too many factors that add up here for me to be bullish. So my advice, and it's not financial advice, but as a friend, I suppose I would tell you to just, do what you think is right. Invest your capital how you see fit, right? You know, make sure you do your research, make sure you know what you're doing. Don't listen to people like me. But if you are going to do one thing, I would recommend that is to just step back and look at the bigger picture before you make any rash decisions. It is so easy to be swayed by what happens on the lower time frame. It's so easy to get sucked in to a move like this where everybody's euphoric and you've seen a big bounce and the market is up, I don't know what, 20%, 25% over the last couple of months. I get it. It looks like a big move. The market has been up only since 2022. You know, we've had 40 years of declining rates. Everybody's used to the Fed swooping in and turning the money printers on in a crisis. So you might be tempted to think that markets can't go down. All I would say is just step back from the noise. Think carefully about where we are. Don't be gung-ho with your capital. Protect yourself. You know, don't take inordinate risk. And think sensibly about how you use the next couple of years and where we might be in the cycle. So I'm not going to tell you what to do with your money. My only advice would be just step back from the daily chart. Don't get sucked into the world of Twitter and X where everybody has their opinion. Just be careful, all right? Don't go taking any crazy risks out there. I am certainly thinking hard about how I put my capital to work in a situation where I think equities and crypto are going to struggle massively. And one of the places that I've been looking, which I've been talking about for weeks, is looking at the commodity market. And I'm going to wrap up now because I know I've probably been with you for about half an hour. And I don't want to bore you to death, but I do want to just paint a picture of where I see equities going. So in a world where the bond market is calling time on crazy levels, unsustainable levels of debt in our economy, what I predict is going to happen, and what I think we saw back in the 1970s in a similar scenario, is that hard assets, so commodities like gold and silver, but also platinum and oil, are going to do really, really well. And there are some companies out there that I think are massively depressed in value, that are trading at, even on a fundamental basis, are trading at ridiculous multiples of earnings and have become completely detached from the appreciation that we've seen in assets like gold and silver recently. And even to some extent, although oil is down on the lower time frames, you know, over the course of this year, it's still, you know, priced relative to where it's been historically. Oil is still in a really healthy place for investors who are seeing stocks like this, which is rock copper exploration. One of the smaller cap oil companies that I recommended over on X as a chart that everybody should take a look at. And back here, I was saying that I really liked this price action. We had broken this big downtrend. We had accumulated for a couple of years in what looked like an ascending triangle. And I said here that I expected price to, make a rapid ascent. And what we saw is appreciation of over 300% since the end of last year. So I know people think I sound bitter when I post charts like this and say carry on fiddling around with your Bitcoin, but Bitcoin is up 17% in that same period since the end of November, and Ethereum is down about 20%. So crypto is not the only market, guys. I know people are obsessed with crypto. It has been the route to riches for some. It's my view that very few people have actually made it out with any decent gains, but if you have, congratulations to you. You've done really well in a very volatile market. But that doesn't mean that crypto is the only space to make money. And so I'm looking really hard at commodities. I think there are reasons to believe that we are in the very early stages of a really significant commodity cycle that could see big gains to people who get in early. And another chart that I would point to on that front is the price of platinum, where we saw recently over the last couple of weeks a big breakout of this downtrend. So I think it's really early on commodities. Some of the investments that I've made have already done really well. Rock copper is a great example where it's up 300% from where it was 6 months ago. I think there's a lot to play for here. So me personally, I'm not interested in cryptocurrency at the moment, and I am unlikely to be interested in cryptocurrencies or equities for at least a year, possibly the better part of 2 years. So that is my whistle stop tour of where we are. Perhaps not a huge amount that is new in there, but I think it is really important that we focus on the bigger picture and don't get too drawn into what happens on a daily or weekly time frame. What we're seeing unfold in markets is massive, and when it's all said and done, I think people will look back and regret being really bullish up here, rather than thinking, how do I take a much more sort of measured approach to managing my capital and my exposure to the market. So that's just my view. Like I say, none of this is investment advice. It's purely for information and entertainment purposes. My only bit of advice, which is not financial, is just take a step back every now and again. Don't get drawn into the daily swings in price, the headlines on trade wars and tariffs and potential recession indicators. There's so much noise out there. Just chill out, focus on the bigger picture, and make sure you manage your exposure in a sensible way that doesn't overexpose you to risk over the next couple of years, would be my only word of caution. But do with that what you will. Definitely head over to X and follow me through at Part-Time Charts if you've not done so already. And please remember, if we see something like this in 2027, Bitcoin trading at 3.5 grand, please remember who it was that forecast this and who it was that told you that this was a likely scenario. Your support means a lot to me. Please share, retweet, hit the subscribe button on YouTube and help me grow the channel. And I hope you find some value in what I try to bring you on a weekly basis. In the meantime, I will see you soon. And if you've got any requests for charts that you'd like me to cover, then please do hit me up on X or leave a comment here. I wish you a fantastic weekend.